ChartingManDan from the ChartGuys.com joins me now. Dan, welcome back.
Glad to be back, James. Thanks.
Dan, what's the main theme of the market for you today?
Well, we're watching the price action over the headlines. So we know that there's a lot of talk about this virus going around, a little bit of fear of economic slowdown. I always care more about what the price is doing than I do about what the headlines are saying. But at this point, today, as we speak right now, the S&P 500 is breaking a key short-term support level, which is, in my opinion, going to open the door wide open for weekend narrative of more fear headlines and further consolidation in the markets to be expected in the short term. And that's going to have an impact on the marijuana sector as well in the short term.
Yeah, you bet. So what would you say is the next support level on the downside if it does break through the current one that you're looking at?
Well, the S&P 500 right now is testing the lowest price that we saw on the initial, we'll call it the virus dump that we saw over the last week or so. So once it breaks that level, it's, again, just right back to that fear narrative, and I'll show you on the chart here in just a second the next key levels that we're going to be looking at. The weekly uptrend remains the most important thing for me. When the weekly uptrend is lost, that's when everything shifts for me. If we're in weekly uptrends in the broader market, it's a buy the dip mindset. Lose the weekly uptrends, then we are looking at a bit more prolonged downside and a bit more patience, and the bears having their first real follow through that we've seen in a significant amount of time.
Sure. So do you think this narrative is being driven almost exclusively by the coronavirus? I mean, there's really zero risk of, sort of any price action as a result of any impeachment action, because that's kind of a done deal already. It's going nowhere, a nothing burger, as people like to say. So is this exclusively coronavirus driven, in your opinion?
Yep, it's always the unknowns. Someone can look to Brexit, but Brexit's known at this point. We have the impeachment. We know the probabilities, and the probabilities are not likely that 2/3 of the Senate are going to do anything. So it's the unknown and the inability to price in probabilities. Well, what if it does get significantly worse? That is where the market is seeing its fear right now, and that is what we're going to be watching. Again, the headlines. For me, it's I look at the chart and I say, well, we're extremely overextended. Consolidation is due. And this headline could just be the catalyst that the talking heads use to explain, well, this is why we're going down. And there's been plenty of times where we've consolidated and we've needed it, technically speaking, and then, CNBC will say, well, it's because of this, or maybe it's because of this, when in reality, my mindset is, as a technical analyst, there doesn't have to be a reason. We get extended in unsustainable moves, and it's just the way markets work. We have to see pullbacks on the way up, and there doesn't always have to be a fundamental reason for those pullbacks.
Right. At some point, just the technical sort of physics and mathematics of the market kicks in. How is this all affecting the cannabis sector for you?
Well, it's going to be key because it does definitely still have an impact, and we're seeing a whole bunch of red out there. It's not massive red in the sector, 1 to 4% across the board, but it is going to be a downside narrative that is only going to, we have the MJ sector that is a high risk sector, and people are not going to be looking to enter high risk sectors if they are not rock solid confident in the market as a whole. So honestly, I continue to look to the fall of 2020 for the MJ sector very patiently, because I know it's a long way away, but the biggest short-term catalyst that the sector could see, in my opinion, is either Elizabeth Warren or Bernie Sanders getting the nomination. And every month that goes by, we're going to have more and more data with which the market is going to be able to price in what is the most likely scenario. So we're going to be looking to, in February, we have some primaries in Iowa and New Hampshire, and we know Bernie Sanders has been gaining a little bit. Again, regardless of any personal political opinions, if either Sanders or Warren wins the ticket for the Democrats and goes up against Trump, it's going to be bullish for the MJ sector. The higher percentage chance that one of them has, the better the sector will respond. And of course, if Biden starts coming out with some wins and some increasing numbers, then it's going to be bearish for the sector. So in my opinion, the market is going to have an impact, but the most important factor for me for the next year is going to be, what are we looking at heading into this election, and what are the results of that election likely to be?
Sure. Okay, well, let's take a look at the charts and see what we see.
So not many charts to be looking at today. The first is the S&P 500, and this is the level that I'm talking about. This is the virus fear dump low. On the S&P 500, 322.66. And we had the high of the bounce, which was just a lower high. And here we are about to drop through to a lower low. Bigger picture, it's not a huge red flag. We're still in a weekly uptrend at this point, and it's just looking like some more prolonged consolidation may be coming. Of course, any prolonged consolidation is not ideal for the MJ sector because it's not positioned well for any market weakness. The bounce that we've seen over the past couple of months has not been significant, and we're going to see some downward pressure, in my opinion, on that bounce if we do see further market downside. So what we're looking for, as I talked about heading into election 2020, is it's going to be an interesting scenario because, in my opinion, if either Warren or Sanders were to win, let's just say if that was a possibility, the MJ sector would respond very bullish, in my opinion, and the market would respond bearish, more so bearish for Bernie than it would for Warren. But the bottom line is big money doesn't really want either of them elected. They like the way things are going with what Trump is doing currently. So it will be an interesting scenario where, in my opinion, it'll almost be like the MJ sector is going to act as a safe haven sector in that market weakness, because I believe that the money that would flow into it on the hype of potential legalization would outweigh any downside market sentiment that we would see as big money leaves the market for the potential changes that may take place that would be less favorable for the bottom line profit on a lot of major companies. So key support level on SPY, if that breaks, it confirms we are in a daily downtrend at this point. Right now, it is a double bottom at that level. Still a whole bunch of time left to trade today. And then, looking at CGC, we had a nice bounce off of the low, and we are in a tightening daily range. We have to see a break of this range. Low of the dump, high of the bounce. Bulls have to form a higher low compared to 2134. So we're looking for that higher low compared to 2134. The only thing that the bulls are happy about is that we're not seeing increased bear volume on the way back down to that level. So I do believe that we're going to see something along these lines into early next week. Have to hold 2134 on any bounce. We'd look for a lower high compared to 2440, and then sometime perhaps around Tuesday or Wednesday, we will look for a break of this tightening range. That being said, if the S&P 500 breaks this double bottom and dumps today or Monday, that will obviously put some more downward pressure on CGC, in my opinion. So two key levels to be watching, one on the S&P 500, one on CGC, and we'll see how we break in the next couple of days.
Dan, that was an awesome contribution as usual. Thanks very much for joining me today.
Thanks, James. See you next time.